In 1 week, the AFEX Commodities Exchange added 366% more in value. What drove this? Michael Martins joins us now, the portfolio manager at AFEX, for the details. Hello, Michael. Good to have you again.
Hi, Ini. Good morning. It is always a pleasure to be here.
Good to have you. So what drove this 366% on the exchange in 1 week?
So thank you very much. So a lot of that value was driven by what happened with the volume of maize that was traded on the exchange. In the week under consideration, I think the value in the week under consideration went from about 2 contracts to trading over 1 million contracts. But just looking over all the other data points that we have on the exchange, so like you said, right, the total value of transactions traded on the exchange went up by 366%, from around 48.59 million to close to trading week at more than 226 million. The total number of contracts traded on the exchange also went up by a factor of 17.89, from 53,743 contracts to close the trading week at more than 1 million contracts, right? However, the total number of deals fell by 18%, from 44 deals to close the trading week at 36 deals. The ACI, which is the AFEX Commodities Index, and the AEI, which is the AFEX Export Index, both remain unchanged at 427.34 points and 168.08 points, respectively. And then speaking, to the volume of contracts or to the value of contracts traded on the exchange, like I said earlier, a lot of that was accounted for, by maize, which traded up from 2 contracts last week to trading more than trading 1,201 contracts this week. And then we also saw significant changes in volume with cocoa, which went up from 485 contracts last week to trading more than 14,000 contracts this week. So the contract changes were also reflected in the price changes that we saw on the exchange during the week, with maize going up by 4.37%, gaining 879 naira in the contract values to close the trading week at 21,000 naira per contract. And then we also saw a massive gain in the price of cocoa, which went up by 17.13%, gaining 16,098 naira in the contract value to close the trading week at 110,098 naira per contract. So those are largely the price changes that we saw on the exchange in the week under consideration. All the other commodities remained, relatively unchanged. And as we always say, if you want to get started trading, because we do come here every other week and inform people about the changes in the commodities market, but there are ways by which you can participate in the market, which is basically to download the app that we have available on iOS and Android. And more broadly, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com.
Talking about availability of sports, we talk about if people are interested in trading. Are there sports contracts available on the COMEX?
Yes. So currently we have only the cocoa spot contracts available for trading on COMEX. And I must say that cocoa did particularly well, for an export product last year, went up by more than 12% over the course of the entire trading season, which is still significantly higher than the rates that we're currently getting, with the treasury bills, which is sort of around 7.5%, or at least significantly less than 10% for the 365 days. So for people that are looking to take part in the commodities market and are looking for some sort of avenue to make, significant gains, cocoa ideally would be a veritable product, that is currently available for trade. We will also have all the other grains available for trade, probably within the month of November and December, when we start having significant volume coming to the market.
And with the treasury yields falling, are there implications for investment in the commodities market?
Yes, and I say that, quote unquote, and that's to say that traditionally, when you're looking at capital flows, traditionally you tend to see capital flow away from the fixed income market, which is the treasury bill market, and then also into the equity market. So it sort of flows in and out like that, and that is when you're looking at the traditional investment space. But it is the case that alternatives are making, the case that they can be veritable investment mediums, to which I would argue that some of the money that would be flowing out of, the fixed income market, that is the treasury bills, would inadvertently find their way, to the commodities market in search of higher yields and higher returns on investment. So yes, I can say, we should have a lot more capital available for investment in the commodities landscape.
All right, Michael, thank you so much. Let's switch over to Yusuf Ogumbi, the investment manager at AFEX now to continue this conversation. Well, it's the start of a new harvest season for a variety of farm produce and an overview of how prices are determined in Nigeria's key agricultural commodities market is necessary. Understanding the basics of commodities market price development is essential for assessing the consequences of market realities and government policies, as well as initiatives existing or proposed. Well, AFEX is in this discussion and will also release a crop production outlook report to advance the conversation. That's what we're having to do with Yusuf Ogunbiyi, the investment manager. Good to speak with you, Mr. Ogunbiyi. Good morning.
Good morning, Ini. Good morning. Nice to be here again.
Good to have you. So COVID-19 is still a major concern around the world, and the shocks from various lockdowns are still obvious. What are the major takeaways from the planting season as we enter a new harvest season?
Thank you very much, Ini. So COVID-19 is still very much of a challenge globally, not just in Nigeria. So we've seen cases of governments issuing orders for lockdowns and some other governments saying that they will be opening up. I think Australia some days ago said they will be opening up fully. So what we now see in this case is a situation where you see that push and pull affecting logistics, supply chains, and movement of commodities across the world. So that's been a challenge. But domestically, the way we've seen it play out is flowing into the fertilizer market. At some time in the year, we saw that we couldn't bring in fertilizer. There were some challenges bringing in fertilizer into the country. At some other time, we noticed that easing out, and now we have significant fertilizer supplies in the country. So what that can do is to affect the production cost, which we think might inch up a bit for farmers that are produced in the country. And what we then see is that will then transfer into the final prices of commodities that will be sold in the markets, in various markets across the country. So that's how we think it will play out, affecting production costs, and then transferring that into the final prices of commodities.
And food inflation, I mean, inflation figures were out on Friday, and it tapered. But I mean, it's reached the highest level in 15 years earlier this year. While it's evident that the overall price level of agricultural item is influenced by a range of market dynamics, what are your price expectations for the new season?
So like you said, food inflation declined a bit as at the last time it was released. But then what we see is that it's like analysts will say it's base effects playing out majorly. In the markets across the country, like you and I know, we still have some bit of challenges with the prices of food commodities in the country. So that's on the one hand. On the other hand, however, we see that prices of commodities going into the next season will reflect the performance of the exchange rate, reflect the performance of production costs, like I mentioned earlier, and also the performance of inflation, the core inflation, so to say. So you have transportation, logistics, affecting these prices. And what we think is that we are beginning to see some sense that prices might move fast as we begin the season. So we might expect a similar behavior to what we saw last year, around the same time last year. And like Michael said, there is some participation. So we see increased participation in this space as well. International buyers are recognizing Nigeria more and more, especially for cocoa, sesame, and ginger. And we think this will also reflect in the prices of commodities, demand and supply balance. So all in all, we think it will still have a mix of what we saw last year, maybe a little bit of price increase in some commodities, but then it will be closely related, similar to what we had last year.
So the degree of influence of government programs varies greatly from commodity to commodity, but in general, government programs increase the incentives to produce the crop receiving support. What program or policies can assist in achieving a favorable price formation across the value chain?
So we've seen the government interventions we see across the value chain as always targeted different segments of the value chain. So you have the interventions in production, which relates to fertilizer, and then what we then see moving forward is that the volatility in prices of commodities in the country is quite high, and we think there is some increasing calls for the need for us to bring about our strategic grain reserves. So you see that the strategic grain reserves in the country are quite diminished, and that means that we consume all we produce in 1 year. We don't have spillovers, we don't have leftovers at the end of every year. And that's where I think some government interventions will be critical now, so that we are able to balance the volatility and also ensure that food security is ensured for the country. So that's one another angle. So in addition to the participation of the government in the production side, we also think establishment of or improving on the strategic grain reserves will be critical in also managing some of these price fluctuations and scarcity that we typically see at some time in the year. So strategic grain reserve is one other intervention that might be necessary.
All right. Well, how do you think a crop production outlook report can help Nigeria's food system?
So a lot of importance is attached to this crop production outlook. So you look at over the last 10 years, if not more than that, we barely have crop outlooks telling us the direction where we think production has been, production cost, and the prices as a result of all of this. So we think, and that's one thing we've been doing over the last 2-3 years now at AFEX, consistently producing, reporting on what the production has been and how we think it will affect the markets. This information is critical for policymakers in designing the strategic grain reserves. It's important for businesses in designing their procurement and supply chain practices. It's important for everybody, ordinary men like you and I, like me and you. It's important for us to take decisions as to how we buy our commodities, when we buy these commodities. At the end of the day, this is very important for determining prices of final products. So imagine if a business is able to structure its supply chain more appropriately, and they are able to take decisions that would help them reduce costs, which we think is a benefit. So that will also mean that they're able to manage their costs. They're able then to also manage the price of their final products that are sold to consumers across the country. So we think the reports have a very diverse use cases, and then policymakers, businesses, investors inclusive, and everybody needs to always follow this form of information to understand what's going on in these markets.
Well, information is power. Thank you so much, Yusuf Ogumbi, and we do hope we would see that report in no distance time from now. Thank you so much, Investment Manager with AFEX, Yusuf Ogumbi. So we'll take a break now. When we come back, I will do an opening call to the markets. To stay with us is Business Morning on Channels Television.